Hey guys, welcome back. In this video, we are going to see one problem from AS12, and this is about the government grant. AS12 talks about the government grant, and under government grant also we are going to see problem from grant for machinery or fixed asset given by the government. Okay, if the government grant has been immediately adjusted with the FA balance. Okay, for example, if I purchase the machinery for 10 lakhs, the government given the grant for 5 lakhs, I immediately adjust the price of the cost of the fixed asset in our books. So I have purchased for 10 lakhs, but I show the fixed asset value as 5 lakhs, and I'll adjust that government grant with the fixed asset I have. Okay, fixed asset 10 lakh, government grant 5 lakhs. I will adjust and show it in our books as 5 lakhs. Okay, in books. Okay, what if the fixed asset, the grant has been treated as deferred income? Deferred income means at the year 1 I received 5 lakhs. I am using that asset for 5 years. Okay, so on the first year I will recognize it as 5 lakh divisible by 5 years, 1 lakh I will recognize. 5 lakh divisible by 5 years, 1 lakh I recognize. For that, every 5 years I will recognize 1 lakh, and at the end of the period I'll recognize all the 5 lakhs as the income in my books. Okay, I'm recognizing the amount immediately, 5 lakhs adjusted with the FA, but here we are recognizing the 5 lakh in systematic manner, 1 lakh, 1 lakh, 1 lakh till the end of the asset's useful life. That's the main difference, which is called as deferred income. We are treating this is the name is deferred income, but we are recognizing it as liability now at the first place. Okay, then on the periodical basis it will be recognized and income over time. Okay, now I have a problem. We can see that. Okay, that is Z Limited. Okay, they are purchasing fixed asset at rupees 50 lakh. Okay, which is estimated to be 5 years, and the salvage value which is 5 lakhs. Okay, on purchase of the asset, okay, government has granted rupees 10 lakh as grant. Okay, 10 lakh grant provided by government at the first time itself. So how we have to treat this in our books? Okay, let's quickly post the journal. Okay, the two sums is the one concept only, but the first question they are asking about the reduction from value of asset. Then we have asked about grant treated as deferred income. Okay, now the first they will buy the asset, right? Fixed asset debit to bank account 50 lakh, same for both, right? There is no change in that. 50 lakh. Then government has granted the 10 lakh grant. Okay, which is bank account debit to fixed asset account. See, we have reduced the value and recognized the income as 10 lakh. Okay, so we have reduced the fixed asset value. Now how we are going to show in the books? We follow deferred income method. Okay, which is we are going to treat as bank account debit to deferred government grant account, which is 10 lakhs. Okay, so here we are treating it as deferred government grant account. Okay, we are not reducing the value of asset here. Okay, then what's the third entry? Year 1. Okay, we have purchased the asset, we have received the government grant. Then the year 1 we have to show the depreciation, right? Depreciation account debit to fixed asset account. Okay, in the first case we have reduced our fixed asset value, right? So 50 lakh is the purchase price, minus 10 lakh is the grant, minus residual value is how much? 5 lakhs divisible by 5 years. Okay, 50 minus 40 minus 5 divisible by 5, which is 7 lakhs. 7 lakhs is the depreciation, but here we haven't reduced the fixed asset value. So what would be the depreciation for here? 50 lakh minus 5 lakh is the residual value, 5 years for 5 years. Okay, so it would be 9 lakhs. So since we are for assuming it as a straight line method, this would be the depreciation for subsequent years. They ask for 2 years, we'll do it for 2 years. Okay, so we have recognized we have charged the depreciation. Now we have to return off with P&L account, debit to depreciation account. Okay, which is 7 lakh year one. So how we are here also we have to return off the depreciation, which is 9 lakh. Now we have to recognize the we have reached the first year, right? We have to recognize the income. Okay, how we can recognize it as a income? Deferred grant, we have already shown it as deferred grant liability, right? So we have to reverse that to P&L account. How much we have to reverse? 10 lakh is the grant amount, and 5 years the asset useful value. So 2 lakh should be recognized as our income for the current year. Okay, we have debited the deferred grant account and credited the P&L. So our income has increased by 2 lakh. So if you see that, if you adjust this, you will get 7 lakh. That's what we have done here also. Okay, here we have splitted and show it as a different entry, but the concept is same for both. Okay, so year 2 also same will follows. Depreciation would be 7 lakh. P&L transfer to depreciation, which is 7 lakh. Then year 2 depreciation account debit to FA, which is 9 lakh we found, and then P&L account debit to depreciation, which is 9 lakh. Then we are recognizing the deferred grant rupees 2 lakh for second year. That's it, problem over. Okay, the thing is we have to understand that whether we are immediately adjusting with the fixed asset or going to treat it as a deferred income. Deferred income means upcoming period income. Okay, upcoming period, how much we are going to recognize it as in our books as a income. So that's what we have learned here. So first we have bought the asset, received grant, depreciation charged, and return off to P&L. Depreciation charge, return off to P&L. Okay, we have treated government grant as deferred government grant. So deferred means we are going to receive it in future as income. This is simply the deferred income. Okay, bank account deferred income. We are can also show it as a deferred government grant. Government grant is a income for us. Okay, then depreciation charged, P&L written off, and then we have shown the 2 lakhs as the income for the first year by the way of grant. Okay, that's it. Thank you.